If you've been holding off on upgrading because you're worried Apple is about to jack up iPhone 18 prices, you're not alone. With component costs climbing and the entire smartphone market leaning more premium every year, a price increase feels almost inevitable. But according to the latest reports, the situation for iPhone 18 buyers might not be as painful as people fear, especially when you compare Apple's likely strategy to what Samsung has been doing lately. New analyst notes circulating via 9to5Mac suggest Apple could take a surprisingly aggressive approach to iPhone 18 pricing, particularly for the base storage versions of the iPhone 18 Pro and iPhone 18 Pro Max. The key idea here is simple. Apple may try to keep the headline starting price as stable as possible, even if it's getting squeezed by rising memory and storage costs behind the scenes. So what does aggressive pricing actually mean in real terms? It likely means Apple tries hard not to move the sticker price that most people see in big ads and headlines, the starting price of the Pro models. Instead of raising the entry point, Apple could shift the cost pressure to places that are less visible at first glance, like higher storage tiers. In other words, the iPhone 18 Pro might launch at the same starting price as the iPhone 17 Pro, but upgrading from 256GB to 512GB or 512GB to 1TB could cost more than it used to. This isn't a new tactic in the smartphone world, and we've already seen similar moves from Samsung. Samsung has often tried to keep a flagship price looking unchanged in one area, while quietly increasing costs elsewhere, whether that's through model reshuffling, storage pricing, or changes to what's included in the box. But the bigger story is how aggressively Samsung has been pushing prices across multiple product lines recently. Look at what's happened with Samsung's Galaxy flagships this year. Some models held steady at launch, but then other devices saw increases, sometimes weeks or months later. Foldables, flips, even value models have experienced bumps. Tablet pricing has also taken a hit in certain high-storage configurations. The pattern feels clear. Samsung is squeezing margins wherever it can because hardware sales remain the core engine of Samsung's consumer business. When parts get more expensive, hardware companies have fewer places to hide the impact. Apple isn't exactly immune to rising costs, but it has a major advantage. Apple's services business keeps getting bigger and more profitable. In Apple's recent quarterly results, services revenue hit roughly $31 billion, growing strongly year over year and making up a larger slice of Apple's total revenue than ever. The iPhone still brings in the most money overall, but services margins are typically far higher than hardware margins. That gives Apple more flexibility to play defense on iPhone pricing if it wants to protect demand and keep upgrade momentum strong. And there's another company showing how that flexibility can work. Google. If you've watched Google's Pixel pricing recently, it can feel almost chaotic, in a way that benefits buyers. The Pixel 10 line has seen heavy promotions and repeated discounts, to the point where the official price can start to feel like a suggestion rather than a rule. Google can do that because Pixel hardware isn't the foundation of Google's business. Search, ads, cloud, and subscriptions are. For Google, a phone can be a distribution channel for services, especially AI services, so growing the installed base can matter more than protecting perfect hardware margins on every sale. Apple isn't Google, and the iPhone isn't a niche product the way Pixel is. Apple sells at a completely different scale, with different supply chain realities and far more price sensitivity at the global level than many people assume. But the lesson still applies. When a company has massive recurring revenue streams, it has more room to absorb short-term cost shocks or delay price hikes if it believes keeping prices steady will drive more long-term value through subscriptions, app spending, accessories, and ecosystem lock-in. So if Apple really is aiming to keep iPhone 18 Pro and iPhone 18 Pro Max starting prices flat, the next question becomes, how long can Apple realistically keep doing that? Because the pressure isn't imaginary. Memory pricing is a real problem. Analysts have been warning that DRAM and SSD costs could surge significantly through 2026, and some forecasts suggest relief might not arrive until late 2027. Translation: even if Apple eats some cost increases for a while, it's fighting a tide that could keep rising for the next year and beyond. That's why the most realistic scenario for iPhone 18 pricing isn't no increases at all. The more likely outcome is no obvious increases where the headlines are. Apple can keep the base model price looking stable while still protecting margins through quieter changes like charging more for storage upgrades, restructuring which storage tier counts as the base in certain regions, adjusting trade-in values to offset pricing pressure, bundling services or shifting promotional strategies through carriers, raising prices on accessories that many buyers purchase anyway. From a buyer's perspective, that distinction matters. Most people shop based on the starting price, monthly financing cost, and trade-in value. If Apple can keep the entry-level Pro pricing stable, it protects the perception that the iPhone 18 lineup is reasonably priced by premium standards, even if power users end up paying more when they spec up storage. So what should iPhone buyers do with this information right now? If you're the kind of person who always buys the base storage iPhone 18 Pro or iPhone 18 Pro Max, the early signs are actually encouraging. Apple may try to keep that starting price from moving too much, at least for this generation, to avoid bad press and protect sales volume. But if you regularly upgrade storage, especially if you jump to 512 GB or 1 TB, prepare for the possibility that the real price increase shows up there instead. The memory tax may not hit everyone equally. It may hit the buyers who want more storage, the highest-end configurations, or the least discounted variants. The bigger takeaway is that Apple appears to be thinking strategically about iPhone 18 pricing, not just passing costs directly to customers in one blunt increase. Compared to the more widespread pricing pressure we've seen from hardware-first companies, Apple has more levers to pull and more motivation to keep the iPhone upgrade cycle healthy. Now the question is whether Apple can maintain that balancing act if memory and storage costs continue to climb through the end of 2026. Apple might be able to delay the pain, hide it in less obvious areas, or spread it across the lineup, but it probably can't outrun those cost trends forever. If you want, I can also break down what this could mean for each iPhone 18 model, Standard, Plus, Pro, and Pro Max, and which one is most likely to offer the best value if Apple shifts price increases into storage tiers.